So let's just start off with what is happening on the building front. Building statistics that have been released, and we've actually seen quite a significant drop that is coming to the fore, around 11% month-on-month decrease that has come through when it comes to those building plans. Is this a cause for concern, or are you just seeing a normalization that is coming through?
I think on a monthly basis, these figures are very volatile as we have such a small industry, and that must be remembered. So we tend to look at the average over a few months. In that regard, we are still a little bit lower than last year. I think maybe a slight reason for concern is the high building costs currently. And then also the completed statistics are not maybe exactly a good sign of what is actually going on the ground. A lot of people do not hand in their submitted building plans after they've completed these buildings. So it might not be as good an indicator as of what is going on the ground.
Okay, so commercial building plans also came through relatively low. When it comes to houses, however, we saw quite a nice increase there, that backing the trend quite significantly. Are you expecting this trend to continue?
Yes, we are expecting this trend to continue, especially when you consider that the government's To Peak program have not yet started to come through, and that will have a significant effect, especially on housing. They are focusing on lower income housing, and I think once we can sort out the issues that are that results in those projects coming through very slowly, once we can sort out that issues, especially the housing category will pick up significantly.
Let's move over to what we've been seeing on the money supply front. We've actually seen money supply slowing in a sense. Private sector credit extension slowing to around 10.2% year on year from 11.2% in January. Again, we're sitting in double digits, so nothing really to worry about because we're still seeing a very healthy number that's coming through.
Yes, yeah, you're exactly right. I think 10% is still healthy enough for us at this point. I think the slight decrease is just maybe coming from the positive effects that the lower interest rates have had, maybe those positive effects just wearing out slightly and filtering through the system. And then especially from a corporate side, credit extended to the corporate sector has been slowing. Business is sitting on a lot of cash at the moment, and you can see overdrafts of businesses decreasing by about 15% year on year. But on the individual side, still healthy growth of about 10%, especially when we look at installment sales, or installment credit rather, at about 20% growth, seeing there reflected in the high vehicle sales numbers that are coming through also.
Mortgage extensions also much slow. We saw a 14% number from the previous 14.7% that came through in January. And what we've actually been seeing here in South Africa, Rudolf, is that mortgage credit is not as robust as unsecured loans that have come through. We're starting to see a very different scenario that is playing out here. How is this now faring in Namibia? Can we draw any parallels?
Yes, I think mortgage growth this side is still a little bit more healthy than on your side at the moment. As you can see, individual mortgages growing about 11%. On the corporate side, growing about 30%, but I think that's as a result of individuals actually registering their mortgages in a CC form for cost benefits. But the unsecured loans in Namibia also starting to be kind of a concern. I think the latest figures that the unsecured or the micro-lending industry is standing at 1.4 billion, which is kind of getting alarming a little bit, especially when you see that that industry is growing faster than the small personal loans at the big four commercial banks.
So what do you think this has got to do with, Rudolf? Do you think it's because banks are starting to now think that, you know, more margins and more profit can be made from this segment of the market that perhaps was once deemed as very risky? Or do you feel that at this point in time we're just seeing a lot more demand than what we saw previously?
Yeah, I think it's a demand issue. The big four commercial banks that we have here, they have very strict and conservative lending criteria. So I think for the average person on the street, it's not that easy to get a loan from them. So they turn to micro lenders, and especially with with living costs increasing as it is, people are struggling and they turn to microlenders because they get a loan much more easily and they actually use that for consumption.
Rudolf, very quickly, we've got inflation figures set to be released, I think, next week. What is your expectation?
Yeah, our inflation figures have been kind of volatile. The last couple of months, I think, jumping from 6.5 to 7.2, back under 7, and the most recent one was about 7.5%. I think we expect that to tick up slightly more going forward. We expect about a peak of 8% this year, mainly driven by obviously food inflation, and then transport inflation actually also expected to come through. We saw a petrol pump price increase, I think yesterday, of about 20 cents per litre, so that should also filter through. And then also some pressure coming from electricity prices going forward.
Fantastic, Rudolf. We have to leave it there. Thank you, sir, for joining us. Great to have you on the program.